Alright guys, today we would like to talk about the International Accounting Standard Board, or we call as IASB, and International Financial Reporting Standard. So this is just an introduction. So if you need to know more about this body and this standard, you might read in detail the lecture material I give you in the first week. So we talk about IASB and IFRS. Okay, this week we are discussing about International Accounting Standard Board and International Financial Reporting Standard. And we have some issues to discuss in this week. The first one is, what is IASB? And then what is the purpose of establishing IASB? And the second one, we try to discuss about the role of International Financial Reporting Interpretation Committee and Standard Advisory Council. Next, we talk about what is International Financial Reporting Standard and how this standard formulated by IASB. And then we also talk about what is the benefit and the pitfall of the International Financial Reporting Standard. And lastly, we talk about do we believe that the adoption of harmonization approach are different from the convergence approach in the International Accounting Standard adoption. Okay, before we continue our discussion, I'll let you to understand some abbreviations as commonly used in the International Accounting Standard arena. The first one is IFRIC, stand for the International Financial Reporting Interpretation Committee, and then we have IASB, is the International Accounting Standard Board, and then we also have IASC, the International Accounting Standard Committee. This committee is the previous Accounting Standard Board. So before we have IASB, the name is IASC. And then we also have IAS, the International Accounting Standard, and then IFRS, the International Financial Reporting Standard, and the last one is SIH, stand for the Standard Advisory Council. To begin with, we talk about what is IASB. Okay, in general, when we talk about IASB, we talk about International Accounting Standard. So this is an independent standard setting board that is appointed and overseen by geographically and professionally diverse group of trustees of the IFRS Foundation. So these trustees is those who are responsible for appointing and oversee the IASB. And then we can see here that IASB are accountable to the public interest. Then why we need IASB? In general, the basic objective of IASB is to develop a single set of high quality, understandable, and enforceable global accounting standard. So this is the main objective of IASB. So this board should develop a single set of high quality. So what is high quality of accounting standard? We will talk later, but at least the accounting standard released by the IASB should be in high quality condition, and then understandable, also enforceable globally when a certain country adopt this financial accounting standard. So we will talk later about what is the quality of accounting, the high quality of accounting standard. Okay, we have some criteria to identify whether certain accounting standard are high quality or not. So the first one is the standard should enhance the financial statement user ability to make decisions. So by having this standard, at least all user of financial statement have ability to make a proper decision making in the right time, and then right decisions, because of the user have relevant and faithful representation of the information we got from the financial statement. And the second one, the accounting standard should provides the preparer the recognition and measurement guidance that able to replicate the economic of the underlying transaction or event. So whatever the condition, when we have a high quality accounting standard, then the standard will provide us with easy guidance and then easy measurement and so on, that enable us to replicate the economic condition of the transaction or event we have in our entity. And then the third one, the accounting standard should be written in a clear, understandable manner, and their principle should be operational to apply. So it is not difficult to apply the principle, because the standard provide us with the clear and understandable standard. And then the fourth one, the accounting standard should decrease the alternative or narrow the alternative accounting choice and improve comparability. So by having a high quality of accounting standard, at least we have a limited accounting choice, accounting alternative, that enable us to compare easily between one company and the company, or maybe between accounting period for the same company. And then the next one, a good or high quality accounting standard should be consistent with the conceptual framework. So there is no contradiction between the accounting standard we produce with the conceptual framework we have, because we know that conceptual framework is the concept underlying the process of accounting standard setting. And then the next one, high quality of accounting standard are characterized by the fact that the disclosure should be limited to the key significant data. And then the last one, we have to make sure that high quality of accounting standard should provide us with the fact that the benefit of implementation outweigh the cost to comply with the accounting standard. So there is some points, some characteristic to understand what is called as high quality accounting standard. Okay, based on the criteria of the high quality accounting standard, then we back to the IASB. Now we talk about the brief history of IASB. Okay, when we see the history of IASB, we can see that at the beginning we have the International Accounting Standard Committee. So IASC, this committee was established in 1973, involving volunteer. They work part-time, and they met 3 times a year. Even though they work as a volunteer and work as a part-time, but they able to issue international accounting standard around 14. We have 1 to 41 international accounting standard, including some interpretation. Because of some reason, then in 2001, the International Accounting Standard Committee was restructured with the new name called as International Accounting Standard Board. So different from the previous committee, the IASB consists of full-time members, full-time management team. They work to produce international accounting standard, and they consist of 16 members, including 13 full-time members and 3 part-time members. Again, the main role of the IASB is to issue or to produce international financial reporting standards. So the name of the standard are different from the previous one. If we look at the previous one, the standards are called as international accounting standards. And then the international accounting standard, some of the standard are revised by IASB. So the old IAS, as long as the standards are not revised by IASB, then the standard remain in force. So we can still use the international accounting standard as long as the standards are not revised by the IASB. Okay, this is the structure of IASB. We can see from the structure here that the IASB or the boards consists of 16 members, including maximum 3 part-time members. So we have 13 full-time member and 3 part-time member. And then the role of the board is to set the technical agenda and then approve standard. Also release exposure draft, including interpretation of the accounting standard. And then this board is appointed and overseen by IFRS Foundation. We can see here that the IFRS Foundation consisting of 22 trustees. The role including a rising fund to support the board in setting their technical agenda and then approving standard and so on. And then the IFRS Foundations is approved and overseen by monitoring board here. And then to help the work of the board, we can see here we have IFRS Advisory Council consisting approximately around 40 members, and then we also have IFRS Interpretation Committee consisting of 14 members. And we also see from this structure that the board also supported by working group, especially when there is major agenda projects, when we have certain accounting issues, and then we set any agenda and so on. So the working group is those who are responsible for managing these agenda projects. So this is the brief structure of IASB to see how IASB is related to the other committee, council, or the trustee. Now we talk in detail about the IASB. Again, IASB is supported by two a body. The first one is Standard Advisory Council or SAC, and then the International Financial Reporting Interpretation Committee or IFRS. And we see before from the structure that the trustees appoints 16 members of IASB consisting of 13 full-time and 3 part-time members coming from 9 countries with a variety of functional backgrounds. So maybe their backgrounds accounting, maybe finance, audit, and so on from the law and maybe other financial background. And then to release or to pass new standard, this IASB has a unique mechanism. This board adopt a super majority voting to pass the new standards. So if the member consisting of 16 fewer members attending the meeting to pass the new standard, so at least 9 out of the 15 of you members should agree to pass the standard. Meanwhile, when the all members, that is 16 members, come to the meeting to discuss about the new standard. So to agree or to pass the new standard, at least 10 out of 16 members should agree to pass the new standard. This is what we call as a super majority voting in regard to passing new standard that should be implemented in the international arena. The next question is, what is the IASB roles? As I mentioned before, that the main responsibility of the IASB is concerned with all technical matter. So all technical matter is the responsibility of the IASB. So it is include how they responsible for full discretion in developing, pursuing its technical agenda, especially when they release exposure draft of the new standard. And then they also responsible for the preparations and issuing the international financial reporting standard other than interpretations. And then the IASB also responsible for the approval and issuing of the interpretation as proposed and developed by the International Financial Reporting Interpretation Committee. So these interpretations developed by IFRS and then approved by IASB and issued by the IASB. So this is the main role of IASB in international accounting standard setting. Now we talk about the trustees of IFRS Foundation. Okay, as mentioned before, that this trustee consists of 22 members, and then this membership renewable term of the 3 years. They come from 6 members from Asia Oceania region, and then 6 members from Europe, 6 members from North America, and 4 members from any other regions. So the role of trustee is responsible for the governance and then the oversight and funding the activities of the IASB. They also promote the work of IASB and the rigorous application of IFRS. So this is the main responsibility of the trustee. Again, this responsibility concerned with the governance, oversight, and funding, also promoting the work of IASB. These trustees are not involved in any technical matter, especially those related to the accounting standard. So all technical matter are responsibility of the IASB. The next supporting body that play important role in the accounting standard, international accounting standard, is International Financial Reporting Interpretation Committee. So this committee is actually the interpretative body of the IASB. So they consist of 14 voting members as appointed by the trustee of the IRS, and then they have an important duty, especially to review the widespread accounting issues that have arisen within the context of current IFRS. So if there is a accounting issue, then this accounting issue will be interpreted by this IFRS, and then they propose the interpretation to the IASB. And then the main aim of this interpretation roles when there is accounting issues is that how this committee reach consensus on the appropriate accounting treatment, especially the IFRS interpretation, and then provides the authoritative guidance on those issues. So this is the main duty of International Financial Reporting Interpretation Committee. So to review the widespread accounting issues, and then they try to reach a consensus about the issue, then provides the authoritative guidance on those issues. Okay, the next body is the Standards Advisory Council. The Standard of Advisory Council is actually a forum for IASB to consult a wide range of representative from user groups and then preparer, financial analysts, academics, and then auditors, regulators, also professional accounting body. So this representative are those who are affected by and interested in the IASB works. So this is the role of the Standard Advisory Council. So this is a place for consultations of a representative from the user, preparer, and so on, especially those who are affected by and interested in the IASB work. Next, we talk about IFRS. This is the product of IASB. So what is IFRS? In general, we might define IFRS is the this word IFRS stand for the International Financial Reporting Standard. As mentioned before, the previous name is the International Accounting Standard, or IAS. So what is IFRS? We might define IFRS as a single set of standard developed by the IASB, stating how particular types of transactions and the event should be reported in financial statement. So in general, we can see here IFRS is a guidance for recognition and measurement how we should report any transaction or event in the financial statement. So IFRS or the work of IASB or the product of IASB might include standard and interpretation. So IASB issued two things. The first one is accounting standard, the International Accounting Standard, or IFRS, and the second one is the interpretation of the International Accounting Standard as proposed by IFRS. And then again, as we discussed before, as long as the old standard are not revised by the IASB, then all old standard or international accounting standard are still implemented in the accounting practice. So as long as there is no revision on the standard, all old standard, all international accounting standard as released before are still implemented in the accounting practice. Okay, and then we can see here that IFRS can be seen as the general principle for recognition, measurement, and reporting requirement for the transactions. What we can see here that IFRS only provide us with the general principle, how we should recognize, how we should measure, how we should report any transaction or events in the financial statement. As the fact that the IFRS are a general principle, concerned with general principle, then we can conclude that IFRS is less extensive body knowledge compared to the US GAAP or the US accounting standard. Why IFRS less extensive body of knowledge? Because IFRS is more principle based, so we do not in other words, IFRS does not discuss a specific industry or maybe specific entity and so on. So we concern with more principle based and then involve less detailed implementation guidance and less extensive industry guidance. So there is no standard for there is no special standard for banking, there is no special standard for mining, or other different entity. So we talk about principle in general. IFRS only talk about general principle for recognition, measurement, and reporting. So we do not concern with special industry or specific or detailed implementation and so on. That's why when we implement IFRS, we require a greater exercise of professional judgment. So the key point of IFRS implementation is the need for professional judgments. So if we have a good professional judgment, then it is not so difficult to implement international financial reporting standard. That's the key point why we need greater exercise professional judgment, because IFRS is more principle-based, less detailed implementation guidance, and also provide us with less extensive industry guidance. This is just a picture to show you how we differentiate principle-based accounting standard to the rule-based accounting standard. Again, IFRS adopt principle-based. Meanwhile, when we compare to United States accounting standard, we can see that United accounting standard is more rule-based. So we can see here that principle-based only provide us with the general principle, so limited standard. But in rule-based, we have a lot of regulation, a lot of standard that provide us with more detailed implementation, or maybe provide us with more industry practice. So this picture provide us with a clear insight how we differentiate principle-based from rule-based accounting standard. So again, the key point is principle-based accounting standard only provide us with general principle of recognition, measurement, and reporting. Meanwhile, rule-based accounting standard provide us with more detailed implementation and so on. So this is the two differences between rule-based and principle-based accounting standard. Okay, this is another illustration how we understand about the principle-based. So in terms of driving a car, when we use principle-based, the rule is simple. That is, drive your car safely. So to interpret what is meant by drive safely, it depends on the professional judgment we have or the driver have. If the driver believes that 100 km per hour is safe for him and for other people, then this can be seen as the driving car safely. And another driver might interpret that driving 80 km per hour is seen as the safe driving a car. It is also accepted. So principle required professional judgments to implement the standard. So this is just illustration how we interpret principle-based. So we do not regulate in detail how many kilometers per hour should be set in certain route or so on, but the concept is simple, just drive safely. So it's depend on your judgment, on your professional judgment, how we interpret driving a car safely. Meanwhile, when we talk about rule-based, for example, in the case of driving a car, so we put detailed regulation. For example, in certain area, you are only allowed to drive around 40 km per hour or maybe 20 km per hour. In the highway, for example, our speed is limited by the rule, for example, 80 km per hour or maybe 100 per hour. So we provide a detailed regulation, detailed guidance depend on the condition we have. So this is what we call as rule based. We have a lot of rule, we have a lot of regulation that is used as guidance in terms of accounting. It's guidance how we measure, record, and then recognize, also report certain transactions. So there is a detailed guidance in accounting practice. So this is what we call as rule based. Everything regulated in detail to help a company, for example, in preparing financial statement and so on. And then when we see from the principle-based accounting standard setting, then we can see here that the ideal structure of principle-based standards as illustrated in this picture. So the main idea is the concept. This is the concept that underlying the general accounting principle. And then based on the concept, we develop measurement principle, and then recognition principle, also the recognition principle, and also presentation and disclosure principle. So we only provide general principle in terms of measurement, recognition, de-recognition, presentation, and disclosure. So we do not provide a detailed implementation in accounting practice. So we only provide general principle. For example, in terms of the recognition principle is we just provide a general principle how we should remove previously recognized financial asset or liability from the entity balance sheets based on the economic substance. For example, we might de-recognize asset when we believe that we do not get the economic benefit from the assets, we cannot control the asset, and we have no hold a risk of the assets. If we believe that the economic substance on the assets, in terms of we cannot control the asset, and then we also have no benefit from the asset, so we might recognize the asset from the balance sheet. So again, this is what we call as principle-based standard. We only provide general accounting principle in terms of measurement, recognition, de-recognition, presentation, and disclosure. Okay, if we refer to the structure of IFRS, again we can see that the concept is the main guideline to prepare the standard. So we develop accounting principle, and then from the accounting standard we might propose some exception of the standard. For example, the standards are not include certain transaction in other activities because the transactions has been regulated by other accounting standard, and then because of some reasons the accounting principle we use, so the general principle of recognition, measurement, and then presentation, de-recognition, and also disclosure might need some interpretations with clear guideline how we should interpret certain terminology, certain principle concerning the measurement, recognition, de-recognition, and then presentation and disclosure. But the key point is that we have limited rule in terms of accounting practice. We just provide a general principle of recognition, measurement, de-recognition, presentation, and disclosure. Okay, as the fact that a concept is the main point of accounting standard setting in the international arena, so we might back to our we might pay attention on the concept we use in international accounting standard arena. So the concept, or we call as conceptual framework, we use in international accounting standard setting actually are similar to the SFAC as proposed by the America. For example, we have the objective of general purpose financial statement, and then we also have a qualitative characteristic of accounting information. Then we have the element of financial statement, and then concept of recognitions and measurements, and the last ones, concept about the presentation and disclosure. So this is the IASB conceptual frameworks. Again, if we look at this component in general, the conceptual framework of IASB actually similar to SFAC as proposed in the America environments, but in general, again, even though the element of the component are similar, but the content may be a little bit different because IASB adopt principle based, meanwhile the FASB, the American Accounting Standard Boards, adopt the rule-based accounting standard. Okay, next, we talk about why some countries adopt international financial reporting standards. So we talk about adoption of international financial reporting standards. We deal with the advantage of international financial reporting standards. So if we adopt international financial reporting standard, we got some advantages here. The first ones, the adoption of IFRS might increase the comparability of and transparency. Why? Because when we use the same standard, so it is easier for us to compare the financial statement between one entity and the entity. So it is easy to compare the financial statement because of the same standard. And also the use of accounting standard might also increase the transparency because financial reporting standard in this international arena required us with the professional judgment, and if we have a good professional judgment, then we may provide more relevant informations, more reliable informations that support the transparency of the company. And the second one, the advantage of adopting IFRS is that this adoption might increase the access to foreign capital markets. Why? Because if all countries use the same accounting standard, in this case they adopt international financial reporting standard, so it is easier for the investor to enter the markets because they will use the same standard. It is not necessary to learn a different standard and so on. So the same standard provide us with the easier access to foreign capital markets. And then the third one, the adoption of IFRS might increase efficiency through a more streamlined financial reporting process. So it is not necessary to use detailed implementation as adopted in the America, for example, that adopt rule based. So using general principle, and then we use our professional judgment. So we might prepare financial statements more efficient. And then the next one, the adoption of IFRS may also increase judgments, which could prevents the financial abuses that have occurred under US GAAP. So professional judgment enable us to provide more reliable, more relevant information, because we believe that if we have a good professional judgment, ethical professional judgments, those the possibility of providing fraudulent statement is low. That's why the adoption of IFRS enable us to increase our judgments that hopefully could prevent the financial abuse or financial manipulation. Okay, as the fact that the adoption of IFRS needs greater professional judgment, then this professional judgment might lead to some the disadvantages of the IFRS adoptions. For example, when we have bad judgments in certain transactions, then this judgment might reduce the quality of financial reporting standard. And then the second one, it is not easy to ensure the consistent application and interpretation of IFRS. Why it is not easy to ensure the consistent application? Again, because of our professional judgments. If we have a bad judgments, we might prefer to use inconsistent application. That's why ensuring consistent application is not easy when we have a bad professional judgment. Okay, next, because of increasing or increased judgments, then this judgment may lead to abuses. Why? Again, because the judgments depend on the integrity and the professionalism of those who make a judgment. If those who make judgment have unethical behavior, then the possibility of creating income manipulation or financial statement manipulations, it's possible to create the abuse of the financial statement. Okay, next, the next disadvantages of IFRS adoption is the use of professional judgment might reduce comparability and increase complexity. Why? Again, because everything depends on the judgment we have. If we make a good judgment, then maybe we can create a better financial statement. But if we have a bad judgment, unethical judgments, then we might lead to a fraudulent financial statement, or maybe a bad financial statement that is not easy for us to compare one company to other company. And then the last one, the adoption of IFRS my concern with the implementation costs. It means that the implementation costs may be outweighed the benefit of the implementation, because the implementations needs how we adjust our system to the international financial reporting standard. Maybe we need to train the accountant who is responsible for financial statement and so on. So there is implementation costs, and sometimes for certain company, this implementation cost might be higher than the benefit of IFRS implementation. Another issue that we need to discuss when we talk about IASB and its product is how IASB develop the standard. In general, the process of accounting standard setting is not different from country to country. For example, when we talk about IFRS here or IASB, the process of developing accounting standard start from accounting issues, and then these issues need a certain research. As when we believe that the issue is important and urgent, then we put the issue on the agenda decisions. Then the working group will work to help the IASB to create a proposal in terms of discussion paper. This is initial exposure draft produced by the IASB, and then this discussion paper is released to the public to get some feedback. So there is a public consultation. After we got the feedback, then the IASB propose exposure draft. When the proposed draft is ready, and then send it back to the public for consultation to get some feedback and so on. And then after that, when we believe that the feedback and so on have been implemented in the exposure draft, and then the standards ready, then the IASB publish the IFRS to the public. Okay, in general, again, the process of how accounting standard develops in general are the same as the other country. So starting from the issue and then finish to the issuance of the standard. Okay, all right, when we talk about the process of standard setting set by the IASB, we can see that the IASB take two process in the standard setting. Why we set a two process? Because we know that this process conducted by independent standard setting board, and then it also involve a systematic process for the developing standard, and then we also involve the engagement of investor, regulator, business leader, and global accounting professions at the every stage of the process. And lastly, the process also involve collaborative effort with the worldwide standard setting community. This is the reason why the standard setting process conducted by SP is called as two process. Okay, the last aspect that we need to discuss is how certain country adopt the IFRS. So there is some options that might be adopted by certain country in regard to international financial reporting standard. They might adopt the convergent approach, or maybe the harmonization approach, or maybe the full adoption. If we talk about full adoption, it means that the country 100% adopt all accounting standard released by IASB. And then when we talk about convergence means to achieve harmony with IFRS. So in this term, the country that adopt the IFRS try to design and maintain national accounting standard in a way that the financial assessment prepared in accordance with national accounting standard, and then draw the unreserved statement of the compliance with IFRS. But it is important to note that convergence does not mean that IFRS should be adopted by word by word. For example, when there is the term true and fair in a certain standard, we might replace the term true and fair for presented fairly, and so on. So we do not need to adopt word by word. So we can use certain terminology based on our own standard. So that's what we call as convergence. If we compare convergence to the harmonizations, we can see the differences here. When we talk about harmonization, we talk about the elimination of differences between the existing accounting standard. So we try to eliminate accounting standard differences. So there is a reduction of alternative while we still maintain a high degree of flexibility in accounting practice. This is what we call as harmonization. We try to eliminate the differences. Meanwhile, when we talk about convergence, we talk about the enforcement of single set of accounting standard by several regulatory body. So this process might involve coming up with new accounting treatment or new accounting standard, not in any current standard. So this is what we call as convergence. We might develop our own standard, and we also adopt certain accounting standard that we perceive relevant to our environments. So this is what we call as convergence, and how the convergence is different from harmonization. If we refer to the progress of IFRS implementation around the world, we can see here that almost every country in any continent have adopted international financial reporting standard. So the standard have been adopted by countries in Africa, and then America, Asia, Oceania, Europe, as well as countries in the Middle East. Next one that I want to show you about the implementation of international financial reporting standard. We might look at the geographical coverage of the IFRS around the world. So you can see this picture here. We got the three colors. The first one is the blue one, and then the gray one and the white one. So we can see countries in the blue area is the countries that require or permits international accounting standard for domestic entities. It means that the domestic entities operating in the country are permitted or sometimes required to adopt or to use international financial reporting standard for their financial statement. Meanwhile, for the gray color, this color show countries that seeks the convergence with or pursuing the adoption of IFRS. So they can see here this country including Indonesia that already take a convergent approach in the process of IFRS adoption. Okay, this slide also provide us with more information about the accounting international accounting standard. So this picture show countries in which IFRS standards are permitted but not required for domestic public companies. It means that the domestic public company are allowed to use international financial reporting standard for their financial statement. This include Japan and then Timor-Leste, Madagascar, Iraq, Switzerland, Suriname, Paraguay, Nicaragua, Panama, and Guatemala. So this is the country that allow their domestic public company to take international financial reporting standard as part of their financial reporting. Finally, to conclude, so we can get some point here that the IASB is an independent private sector body. So this is private sector, not government body, that develop and approve international financial reporting standard. So this body operates under the oversight of the IFRS foundations, and then this body actually formed in 2001 to replace the International Accounting Standard Committee that previously established in 1973. And then the main product of the IASB is International Financial Reporting Standard, what we call as a single set of standard developed by the IASB, setting how a particular types of transaction and other event should be reported in the financial statement. Lastly, the adoption of international financial reporting standard play important role in enhancing transparency, the accountability, and the efficiency of financial reporting. The standard bring transparency by enhancing the international comparability and quality of financial informations, and the standard also enable investor and other market participants to make informed economic decisions. And then from the perspective of accountability, the adoption of IFRS also strengthen the accountability by reducing the information gap between the provider of capital and the people to whom they have entrusted their money. So adoption of international financial reporting standard will provide them with information needed to hold management to account, and then play important role in helping regulator around the world. And then the last one, from efficiency point of view, international financial reporting standard contribute to economic efficiency by helping investor to identify opportunities and risks across the world. Therefore, this adoption also improve capital allocations, and then the use of single trusted accounting language also lower the cost of capital and reduce international reporting costs. Okay, that's all we want to discuss today, talking about IASB and IFRS. Hopefully you enjoy this online class, and then you have an opportunity to answer some questions I already posted on our teams. Okay, thank you. See you next week.